Perfect. Hello, thank you. I guess you can hear me well. Cryptic title, but also catchy title, a bit attention seeking. I hope you excuse that. Hope I won't fool you. Again, the title I'll share some alpha. No, insert random token ticker is not better on ETH. Yeah, my name's Denis Vuckovac. Apparently, I like to stare on my phone. There's free pictures of that, me doing that, because we're in Serbia. It's always free things like free kisses and later maybe free shots of rakia, maybe more. Let's see. I'm originally from the region. I was born in former Yugoslavia. I'm a German national, lived most of my life in Germany, and now living in Switzerland. I have a background in machine learning and statistics. I moved to Switzerland to actually do the PhD back in 2014. And then actually we started setting up the fund. So I'm like one of three founders and partners at Very Early Ventures. Yes, Very Early Ventures is an early stage crypto fund based out of Switzerland, mostly Zurich. We're three very technical people, like two of us have a computer science degree. We all met at the university. The other is also fairly technical, doing token design work. We were at, I don't know, Maker, Silo, Outlier Ventures before, and then like 2 years ago, we set up the fund. We have institutional investors, but also like crypto natives, which is quite nice because they help us stay grounded and with deal flow, as people like to say in the VC space. And we're generally investing in Web3 infrastructure across the whole tech stack. We do private investments in like companies that build things. Maybe they launch a token, maybe not. So we do both equity and token investments, but we also just purchase tokens on the markets like any other retail user could. Well, and that's part of the motivation of today's talk. Before jumping into these Greek letters, alpha and beta, let's check alpha first. Like everyone wants alpha, but what is actually alpha? For that, I asked ChatGPT. What's the answer? Alpha is the magic ingredient in investing that tells you how much an investment beats or lags behind the market. A positive alpha means your investment is outperforming, making you look like a financial genius, while a negative alpha suggests it's underperforming, signaling a need to rethink your strategy. In essence, alpha is your portfolio's way of saying, I've got a little something extra. All right. It's been quite a long paragraph. Alpha is quite a lot, but essentially it's two things. It's on the one hand, it's outperformance, so being like better than the market. But actually, there's some more captured in that. It's also like being better than the market, independent of the market. So like it doesn't really matter whether everything went up or down, you're beating things. And it's not like just pure leverage, because that we would not consider alpha. Okay, from alpha, as I said here, follows beta. What is beta? In essence, alpha and beta both come from, well, financial engineering, 21st century research. Most specifically, the capital asset pricing model, the CAPM. I don't really know who's behind that or whether they received a Nobel Prize or like one of those fake Nobel Prizes in economics, but they might have. Alpha, as I mentioned, is basically how much you're beating the market, like independent of the market. Beta, on the other hand, is like how much you're moving up or down with market and how much more sensitive or elastic you are. So let's say something has a beta of 2. That basically means if the market goes up 1%, or let's say 10% in a day because it's crypto and it's much more volatile, you're going up 20%. And if something goes down 10%, you're going down 20%. Okay. Usually you do that and you compare that with like some kind of market portfolio, like the whole market. In crypto, we often like to think of something being beta on ETH, or back in the days, like beta on Bitcoin. ETH actually was often considered being beta on Bitcoin. How do you get alpha and beta? In the end, you can get them from a very simple linear regression. You can estimate the alpha being, let's say, more or less just the coefficient of a linear regression, and the beta being, like, in this case, the coefficient in front of the returns of ETH. Why is beta relevant? Well, consider, or let's imagine you're a portfolio manager and you have a limited set of capital and you want exposure to ETH, but maybe you also want exposure to some other assets. So in that case, okay, you could just have like 100% in ETH, but you don't have any exposure to Solana or Cosmos or whatever else. In the other case, you might just go to 80% ETH and 20% Solana, which means, okay, that's not great because now you have only 80% exposure to ETH, but you want 100% exposure. Instead, what you could do, you could just have 50% in something that you consider better on ETH. In the other hand, you could just have that full exposure to ETH, that full exposure to the L2 system, which is often commonly referred to as a better play on ETH. And instead of holding ETH, you're holding Arbitrum or Optimism. So, what? Okay. What is something that nowadays is commonly being repeated or believed? Essentially, it's two things. One thing is that LSTs, like liquid staking tokens, are behaving like beta on ETH. And the other belief is that Arbitrum, Optimism, the L2 tokens are behaving as beta on ETH. Is that true? Is it not? Let's have a look. This is a analysis of the beta estimates on a 90-day rolling basis. So we're looking at the past 90 days. We're looking at these beta coefficients, and we're looking at the top 5 tokens, and below also like some other tokens that we're interested in. As I mentioned, Arbitrum, Optimism, they're down here. You see a coefficient of 0.94, 0.91. So that's not really a beta that's bigger than 1, because you want one that's bigger than 1 if you really want beta on ETH. Up there, you see ENS, you see Doge, you do see actually Lido. So Lido currently does have a beta of 1.28. Okay, that's interesting. That's like one of the theses which seems to be slightly confirmed, the other not so much. The problem, if you look at this, is that your beta coefficients are actually varying quite a lot. So they're not just really stable, 1.28 or 1.3. They're actually ranging from 0.5 to 1.8 in the case of ENS. In the case of Lido, we've seen periods where the beta was around 0.6. We've seen periods where the beta was 1.8. This now would be just like a visualization, a graph of these 90-day rolling average of Lido, Arbitrum, Optimism. Down there you can see currently Arbitrum, Optimism, we have a beta below 1. So it's not really moving more than ETH. Lido, on the other hand, does move slightly stronger. This now is a few other coins. ENS, I mentioned, is currently the one with the strongest beta, the strongest sensitivity relative to ETH, moving stronger up, moving stronger down. CELO, interestingly as well, was recently even a stronger beta play on ETH, but has recovered or fallen quite a bit. Maybe CELO because of its most recent transition to becoming an L2. But then you see Maker, the powerhouse, being considered as something really stable, has a beta of around 0.8. So it moves much less, and indeed it's much less volatile. So these are the beta estimates. I mentioned before there's not just beta, there's also alpha, so let's look into the alpha as well. And Arbitrum, Optimism, Lido looks quite bad. The alpha is actually negative, so there's no real alpha in holding these tokens. And now you can think of, okay, why is that? Is there maybe too much supply? Are people like constantly selling? Maybe that's a reason, but maybe there's really just no fundamental tie that makes Lido or Arbitrum or Optimism like really a better play that moves more or less than ETH. Interestingly, again, there were periods where we had stronger or more positive alpha, but nowadays really Lido, Arbitrum, Optimism don't look that great. And here the other three cases that we did find quite interesting, ENS, CeeLo, again, negative alpha. Maker, once again, quite interesting, both positive alpha and a quite stable 0.8 beta. So something that's really, if you don't want to be a degen, if you want something with crypto exposure that is quite stable, Maker does seem from that portfolio construction perspective to be quite a good bet. All right, so to wrap up, final conclusion. There's nothing really that is consistent beta on ETH. Sometimes it is, sometimes it's not. But as I mentioned before, why should it be? Like really, most of the tokens don't have any value accrual that is really fundamentally tied to Ethereum. And also if you think about like the ETF approval and demand coming from ETF buyers, why should that cause Lido, Arbitrum, or any other token to go up hand in hand with ETH? Betas change over time, and if you want to have such an investment philosophy where you do beta-based investing, you do really need to observe your beta and make sure you don't have a beta or maybe even alpha decay. If you want ETH and you want leverage, just get leverage. Don't go too hard. Leverage can also be like 1.5x. And keep looking for alpha, because there's always cool people building cool fundamental stuff where, yeah, you can also invest and make money. Yeah, that's it.
Do we have any questions? We have some time. Yep, perfect.
Hi. Maybe I'm misguided a little bit, but to your second point that there's no fundamental reason why some tokens should behave like Ether, isn't it kind of a fundamental reason that if some, let's say, meme coin is deployed on Ether, you need to buy ETH to then buy into this meme coin? Or this is maybe outside of this alpha and beta talk. You know what I mean?
Yeah, I think I understand what you're asking.
I mean, that is, sorry to interrupt. That is basically the whole kind of idea why people talk about this is beta, this is ETH beta, because ETH assets, basically. So.
I don't think it's enough of a demand driver. Let's say people investing in a meme coin on ETH that just want to buy it. Yes, that's a very good point. The NFT point, I'm totally with you, and I think many NFTs are actually, I didn't do the analysis. That's something I could do, but as you can tell, like NFTs are a bit harder to analyze. You look maybe at floor prices, whatever. I would say yes, NFTs are better plays, but I'm telling you for what reason. The reason is that NFTs are still traded against ETH. So they're quoted and traded against ETH, whereas many of the other tokens, they are just like consistently, even the AMMs, if you look at all the pools, like the stablecoin pools, USDC, USDT, DAI, whatever, have become much stronger. And also we're not really trading against Bitcoins anymore. Things are not quoted in Satoshis. And that's why something like Litecoin or Doge that maybe was better on Bitcoin because you would trade against Bitcoin was, but now is not anymore. And because of that, I'd say yes, NFTs. The blue chips, crypto punks might still be.
Okay. Yeah. Hi. Interesting presentation. I was just wondering about the graphs that you showed. What for alpha? Yeah, this. Is there some tool that uses this, or is this something you built privately?
No tool. I did it myself. You just basically get the price data. You get daily returns, and well, yeah.
Okay.
Then you need to do on a rolling basis the estimation of these coefficients.
Okay, I'm just wondering where do you get the prices? Which tool did you use for this?
You could either use the CoinGecko API or Yahoo Finance as a good. I mean, this was all done in Python.
Okay.
There's a Y Finance library where you can easily get the token or put in the token tickers, and then get the data from Yahoo Finance.
Okay. Can ChatGPT build this for me?
Maybe
Yeah.
there's a good chance, I guess.
Yeah, seems doable. Yeah. Okay, that's it.
There's a good chance the results of this presentation might make it into like a blog post, and then there's somewhat of a chance from there that they might make it into like a public type of dashboard where people could play around with, but yeah, not fully certain.
Any more questions? Yep.
Maybe too much of a question, but how often do you actually do asset reallocation based on your analysis? Because I mean, no.
We never. So there's a whole industry, TradFi industry, that does like portfolio construction, rebalancing on such basis, like trying to target a certain beta, trying to track something, and then they speak of tracking errors, all these types of things. And I think crypto is too early of an industry to do that. So we need more of the fundamental type of asset allocation. So never. But it's good to be aware if you're like your overall portfolio has maybe a beta of 1.3 or something, and then you expect ETH might drop 10%, and you might drop 13 or maybe even more. So for risk management, we keep track of these numbers just to be aware.
Thanks.
Is there anyone else who would like to ask something?
This?
Any more questions, comments? If not, that's it. Thank you very much. One more.
Thank you. Thanks.